So the other day, I got a question from a viewer asking me what stocks I would buy if the market was to crash again, or we just kind of had like a big drop or like another correction in the market. And it really got me thinking because, the market is trading basically at all-time highs right now. I feel like we are definitely overdue for a pullback. I feel like that's been the case for a while. This is still an election year. I think there's going to be a lot of volatility going forward. Could definitely see some dips. And if that were the case, what would be some good options, not just for me, but what would also be some good options just for the general public as well? Well, I decided to create a new series for the channel. And if you guys like this, let me know by hitting the like button or just leaving a comment. But if you guys do enjoy this, maybe I can do more episodes in the future, maybe like once a month, where we'll basically talk about 3 stocks that I think would be great buys on any market dip. And to make things a little like more interesting and fun, the way we're gonna do this is we'll actually choose one foundational kind of core stock that is a great stock you can buy on really any kind of dip. Anytime it dips, you could just add to it. You could build your portfolio around it. Just a great stock to buy on any dips at all. And then for the second stock, we'll do one that is more kind of middle of the road, a stock that is maybe a little bit riskier, but maybe also has a little more growth potential. Maybe it's like a tech stock, something like that. Maybe it's a little bit more of an exciting stock. And then for the third stock, we'll do a dividend stock, and we'll do a really good, solid dividend stock that if it was to drop, not only would it be a great stock to buy at that lower price, but it would also bring up the yield for the dividend. And so you'd be able to just kind of hold on to that dividend stock over the long term, and you'd be collecting some great dividends all along the way. Maybe it's a good stock with a good track record of dividends, things like that. So again, if you guys like this idea, make sure you let me know, hit that like button, and maybe I'll do more episodes. Maybe we can do like once a month, something like that. I think would be a lot of fun. But we got a lot to cover here, so let's go ahead and run through the list of 3 awesome stocks that I think would be great buys during a market dip. All right, now starting with the first stock on the list, that's going to be the almighty Google, ticker symbol GOOG or GOGL. And by the way, I know it's called Alphabet. Someone went off on me in the comment section in a previous video. I know it's Alphabet. I just, I say Google just because it's easier. But anyway, what I like about this one, it's definitely a true foundational stock. And just like in that kind of fashion, Google is one stock that very rarely ever dips, as you can clearly see on this 10-year chart. It used to trade for as little as the $400 range back in 2014, but has since climbed to an all-time high of around $1,600. And really the sharpest drop or the best kind of buying opportunity was earlier this year, where it dropped to about $1,000 per share. But give us another drop like that, and I'd definitely be buying this stock very heavily myself. Sales have been incredible for them over the years, usually growing at around 20% or more. This year is obviously going to be a down year of only about 6% growth because of the health crisis, but that growth jumps all the way back up to 20% next year at a gigantic more than $200 billion in revenue. That's pretty crazy. And out of the $162 billion that they brought in last year, almost $35 billion of that went straight to their bottom line. Even with all of their R&D spending and all of the innovation that they have to invest heavily in every single year, they still bring in all of that profit. That's very impressive. As a result, even with the stock trading at an all-time high, there's still not even a single analyst on Yahoo Finance that gives this stock a sell rating or even an underperform rating. The average is buy to strong buy, and there's good reason for it. Even with their high growth, they already had the largest search engine market share in the world at 86%, with no other company even reaching the double digits. They also command the most digital advertising market share, the most browser market share with Chrome, the most mobile operating system market share with Android, and the 3rd largest cloud market share with Google Cloud. But one of the reasons why I like Google the most right now specifically is actually because of what you're using to watch this video, and that is of course YouTube. Google finally started releasing some of their financial information for YouTube last year, which saw massive revenue growth of 37% in 2017 and then another 36% last year. And it's important to note too that some of their other YouTube services like YouTube Premium that removes commercials, or YouTube TV that I think can become a big player in the huge kind of video streaming market in the future, are not included in these numbers. So they'd actually be a lot bigger if they were to include some of those other services as well. Anyway, add it all up, including their various artificial intelligence ventures like Calico, Verily, and DeepMind in healthcare, and Waymo in autonomous driving. And Google is an easy stock, core stock, very good foundational stock to pick up on literally any dip. And you can always just kind of keep adding to it anytime it drops and really just kind of build a portfolio around it. It's one of those just really good stocks for the long term. Okay, now moving on to the second stock on the list. This will be our sort of middle of the road, a little riskier, but also lots of future potential, and that is Nvidia. Ticker symbol is NVDA, the company famous for developing various graphics computing chips that are used in many different markets to process large amounts of data across personal computing, gaming, large data centers for the cloud, artificial intelligence, autonomous driving, and even smart cities and the Internet of Things that I think will be gigantic markets in the future. Now, this is a stock that I already own myself, but it's still a relatively small position, and I would love to buy a ton more of it on any big drop. In the past 5 years, though, the stock has already skyrocketed by over 2,000%. Now, there was actually a nice drop during the market crash earlier this year, but we have to zoom in to really even be able to see it, where it dropped to just slightly less than $200. But even on this 1 year chart, it's still pretty hard to see the drop there because the stock later skyrocketed very sharply to over $500 per share, where it sits today. So it's been on a huge run up. Good reason for it though, as Nvidia is one of those few companies that is actually benefiting from the global health crisis, as people are forced to stay home and may turn to video games for entertainment, or maybe have to work from home or even attend school from home, which of course would require good computers and high performing cloud infrastructure to facilitate all of it, which are all things that really benefit Nvidia's GPU sales. In fact, revenue is expected to soar by almost 45% this year and still grow by another almost 20% next year as well. That's very high growth, and in their last quarter, those sales were up a gigantic 50%, led by data center revenue soaring by a massive 167%, while gaming also grew by another 26% as well. And much of those sales are going straight to the bottom line, as non-GAAP operating income soared by almost 90%, net income by almost 80%, and operating cash flow by almost 70%. By the way, a lot of their growth in data center is also due to their recent acquisition of Mellanox that I believe was almost entirely paid in cash, thanks to their strong record of very good financials and very solid balance sheets, which will only make them stronger in the cloud markets going forward because of that acquisition that they already continue to see major success in that cloud market. For example, it was recently announced that both Google and Microsoft, two giant behemoths in the cloud and artificial intelligence markets, will be upgrading their servers with Nvidia's new A100 GPUs that offer 20 times better performance than their predecessors. Meanwhile, their other segments like professional visualization and automotive did actually see large drops in the quarter because of offices being closed down and automotive sales crashing because of the global health crisis, but those losses have not only been offset by Nvidia's diversified portfolio, but auto manufacturing also bottomed out in April, and when looking into the future, I think there will be plenty of growth as the macroeconomy recovers, going into kind of the rebound. Personally, I think that the autonomous driving market in itself will be a giant opportunity for Nvidia as they try to cement themselves as a very strong competitor to something like Tesla, probably in the kind of number 2 position in terms of hardware and software, and they'll be in high demand by a ton of auto companies that have really fallen behind Tesla, and they are desperately trying to catch up to them. So hiring Nvidia as a third party is a great way of doing that, catching up to Tesla, since they lack really the innovation to kind of do it themselves. They may not get to the level of Tesla, but I think it'll help them compete. Okay, now finally moving on to the last stock on the list, and that's going to be our solid dividend paying stock. And for that one, I'm going to go ahead and go with Johnson & Johnson. Ticker symbol is J&J. And you guys know this one, they're very famous for their lotions and powders, but also a wide variety of other household brands like Band-Aid and Listerine, and a robust medicine portfolio that includes Tylenol, Motrin, and Benadryl, just to name a few. They're even the company behind AccuView contact lenses and Nicorette gums. But speaking of their medicine portfolio, J&J happens to be also one of the leaders in the race to develop and release a V-shot for the pepperoni, with 100 million doses going to the US for emergency use, probably around the end of this year, and then another 1 billion doses worldwide through next year. Currently, J&J is behind other leaders in terms of the trial progress, but what they're doing is kind of taking the safer, longer term approach to really kind of separate themselves as a bigger leader down the road. For example, while a younger company like Moderna is rushing to the market with new and perhaps unproven RNA technology for their V shots, J&J is the only company, at least to my knowledge, that is already implementing next month a late stage trial that will include as many as 60,000 people, which by the way is about double or more what most other companies are doing, and the trial will last for as much as 2 years to prove its overall safety. Again, obviously there will be earlier releases of the shot for emergency use, but if they're able to prove wider safety than other competitors for what might actually be just a single dose compared to most others that are using kind of double dose, that could end up landing them huge contracts all around the world, assuming that the pepperoni lingers on into the future in some capacity, or maybe mutates, or something like that, which is unfortunately a real possibility. Going back to the $1 billion contract with the US though, J&J is actually charging a lot less for their shot, at about half of what other major competitors like Pfizer and BioNTech are charging for theirs, at around $2 billion. And at first glance that might seem like a terrible strategy, but I think they're really just kind of avoiding profits during the pandemic, and then they'll later raise their price when cases go down and they can offer a more efficient kind of single dose that people are more likely to take, and that still kind of costs less because of it. And it'll also be proven to be safer thanks to their much larger safety trial. And on top of that, it can be massively produced because of the scalability of Johnson & Johnson being the largest healthcare company in the world. So all of that could end up setting them up as a leader in the pepperoni kind of V-shot market. And again, really helps them stand out and differentiate themselves amongst a gigantic sea of over 160 different companies that are currently developing V-shots for it. Even if it's a failure though, J&J has already proven to be a massively successful company that deserves a spot in people's portfolios regardless. The company was founded in 1886, which means it's been a dominant healthcare leader in 3 different centuries. That's pretty crazy. And their financials continue to be in the tens of billions of dollars year after year, although the last few years have been plagued with lawsuits that did hurt their reputation, slowed their growth, and probably kept their stock price suppressed a little and prevented it from really having a major breakout in recent years, as you can see on this 10-year chart. However, that also helped their valuation stay lower at about 25% cheaper than the sector median on a forward PE basis, and it also kept a decently high dividend yield of over 2.6% with a good payout ratio of just over 50%, a somewhat low growth rate of only 6%, but a massive growth history that is actually 57 years in a row. I know Seeking Alpha says they're only 31 years, but it should actually say 57. I'm guessing it's just kind of a glitch or something with the Seeking Alpha website. Anyway, the point is, a V-shot or not, that's just a current kind of tailwind. But even if you remove that from the equation, J&J is still this great company that you can really pick up on any kind of market dip, not just because it's a great diversified giant company that I think isn't going away anytime soon, but also because of that really nice dividend that has a long proven track record of management being committed to paying that dividend, and you can just kind of collect that into the future. And again, if you get in a market dip, you get a higher yield as well. So anyway, those are the 3 stocks that I kind of, really like for a market dip. I've definitely got way more in my head. So if you guys want more episodes, let me know down below and I'll make more episodes for you guys. And if you have any recommendations, let me know down below as well. Maybe I can toss one of those in there and give you my opinion on them as well too. So there's a lot of ways we could do this, and I think it would be a lot of fun. But anyway, thanks again for watching the video. I really appreciate it. And I will catch you guys in the next one. Stay safe out there, guys, and take care. I'll see you later. Bye-bye.